Let's talk about a new twist in American debt. People are ghosting their car payments. It's a phenomenon that's quietly spreading across the country, and it's changing the way we think about car ownership and financial priorities. For decades, the car payment was untouchable. You paid it no matter what because you needed that car to get to work, to take your kids to school, to live the American dream. The car was more than just transportation. It was a symbol of freedom, independence, and success. But now, more Americans are deciding that a $700 a month payment for a used crossover just isn't worth it. With inflation driving up the cost of everything from groceries to rent, families are being forced to make tough choices. The car payment, once a top priority, is slipping down the list. This isn't just a few people falling behind, it's a quiet rebellion against unaffordable auto loans. People are questioning whether it makes sense to keep paying for a car that's draining their bank account every month. Instead of irresponsibility, it's about survival. When groceries and rent eat up your paycheck, the car payment is the first to go. It's a calculated decision, not a careless one. People are prioritizing food on the table and a roof over their heads. People are hiding their cars from repo men, taking the bus or carpooling, anything to avoid that crushing bill. Some are even moving to cities where public transportation is an option, just to escape the burden of car debt. The American dream of a car in every driveway is colliding with the reality of shrinking bank accounts. For many, the driveway is now empty and the dream feels out of reach. Skipping a car payment is a red flag for the economy, a sign that the math just doesn't work for millions. It's a warning that the system is under strain and that something fundamental is broken. The freedom of the open road has been replaced by the weight of a loan that's become impossible to carry. The stress of falling behind on payments is taking a toll on families and individuals alike. And when people stop paying for their cars, the whole system starts to shake. Lenders, dealerships, and even automakers feel the impact as repossessions rise and used car values drop. This isn't just about cars, it's about a financial system under stress. The ripple effects reach Wall Street, local businesses, and the broader economy. The car payment, once sacred, is now the first casualty in the battle for affordability. It's a sign of changing priorities and a new era of financial reality for American families. And as we'll see, the consequences ripple far beyond the driveway. The choices people make today will shape the future of car ownership, lending, and the American dream itself. Skipping a car payment isn't like skipping Netflix or forgetting to pay for a streaming service. It's much, much worse. When you miss a car payment, the consequences are immediate and severe, and the impact can ripple through every part of your life. Miss just one payment, and your car can vanish overnight, whisked away by the repo man while you sleep. It's a harsh wake-up call that can happen to anyone, no matter how careful you are. Unlike credit cards, which are unsecured, your car is a secured asset. That means the bank or lender has the legal right to take it back quickly if you fall behind. There's no lengthy grace period, just a swift, often silent repossession. For most Americans, losing a car isn't just an inconvenience. It can mean losing your job, your ability to get groceries, take your kids to school, or even visit the doctor. Your mobility, your independence, and your sense of security can disappear in an instant. That's why, for decades, people would do almost anything to avoid missing a car payment, cutting back on other expenses, picking up extra shifts, or even selling personal belongings just to keep their car. But now, with rising costs and stagnant wages, more and more people are being forced to make impossible choices between keeping their car and paying for basic needs like rent, utilities, or even putting food on the table. The car, once a symbol of freedom and opportunity, has become a heavy liability. For some, it's a burden they're reluctantly willing to let go, even if it means losing a piece of their independence. And the fallout doesn't stop there. A repossession can nuke your credit score for up to 7 years, making it nearly impossible to get approved for future loans, credit cards, or even a new apartment. It's like wearing a scarlet letter in the financial world, a mark that follows you everywhere, closing doors and limiting your options for years to come. The fact that so many people are now willing to take this massive financial hit shows just how desperate things have become. It's not about being irresponsible, it's about survival. People aren't being reckless or careless, they're simply out of options, forced to make choices no one should have to face. For many, the end of the road isn't just a metaphor, it's a harsh reality. both literally and financially, that's playing out in towns and cities across the country. The numbers are grim. Auto loan delinquencies are at their highest since the 2008 crisis. Over 6% of all auto loans are seriously delinquent, representing billions in distress. It's not just subprime borrowers, even people with good credit are falling behind. The problem isn't just risky lending, it's that cars have become unaffordable for many. One unexpected expense and that manageable payment becomes impossible. Repossessed cars flood auctions, creating a glut of unsold vehicles. Dealerships are drowning in inventory. Some have 5 months' worth of cars just sitting. More repossessions mean lower used car prices, which hurts new car sales and dealer profits. It's a vicious cycle, a slow-motion pile-up that threatens the whole industry. The mountain of unsold cars is casting a long shadow over the economy. Car dealers are in crisis mode. Their lots are packed with unsold cars, and every day those cars sit, the dealer pays more in interest. 2 years ago, cars flew off the lot. Now it's crickets. Dealers are bleeding money, squeezed by high interest rates and falling sales. Service departments are hurting too. People can't afford repairs, so they delay or go elsewhere. Dealers slash prices, offer wild incentives, and throw in extras, but it's not enough. The real problem? Cars are just too expensive for most people. No amount of free floor mats can fix that. For many dealers, the math no longer adds up. The future looks less like an open road and more like a dead end. The car business is running on fumes. When a dealership closes, it's more than a business loss. It's a blow to the whole town. These places are major employers and community sponsors. When they shut down, dozens lose their jobs: mechanics, salespeople, office staff. The ripple effect hits local diners, radio stations, and service companies. The closure hollows out the local middle class and weakens the economy. Across the Midwest and Rust Belt, small dealerships are quietly disappearing. No big headlines, just another closed sign and another empty lot. The human cost is real: lost jobs, diminished communities, and fading stability. The auto mall lights are going out, one town at a time. It's not just about cars. It's about the heart of small-town America. The car market meltdown is leaving scars that won't heal quickly. Let's talk about being underwater on your car loan, owing more than your car is worth. Right now, millions are stuck in this trap. Pandemic-era high prices led people to roll old debt into new, longer loans. Now, used car values have crashed, but loan balances haven't budged. People can't sell or trade in their cars without taking a huge loss. Dealers just roll negative equity into new loans, making things worse. You're stuck with a car you can't afford and a payment you can't escape. For many, this is the breaking point. They stop paying and the repo cycle begins. Being underwater is the final push over the financial cliff. It's a trap with no easy exit. To understand this mess, rewind to 2021-2023, the wildest car market ever. Chip shortages killed new car supply, so used car prices exploded. People paid thousands over sticker and lenders wrote huge loans. Everyone thought the boom would last forever. But the wave crashed, new cars returned, demand dried up, and prices plummeted. Used car values fell fast, trapping buyers and dealers who bought at the peak. Dealers are now selling at a loss and buyers are stuck underwater. The market is recalibrating from euphoria to reality. New car prices haven't dropped as much, but the days of paying over sticker are gone. Discounts and incentives are back as dealers struggle to move inventory. The roller coaster went up and now everyone's feeling the drop. The price whiplash is at the heart of today's crisis. The ride down is proving far more painful than the climb up. In this crisis, some dealerships are adapting to survive. The winners? Small, nimble lots selling older, affordable used cars. There's huge demand for reliable cars under $10,000. No fancy showrooms needed. These dealers focus on value and reputation, not flashy sales. Others are shifting from sales to service, becoming the go-to repair shop in town. People may delay buying, but they can't delay repairs forever. The new model is about long-term relationships, not quick sales. In a world where affordability is king, value wins. You don't need to sell the newest car to succeed, just keep the old ones running. The survivors are those who adapt, not those who cling to the past. The car business is evolving one wrench at a time. So, what do you do if you actually need a car right now? The car market can feel overwhelming, with prices high and choices endless, but you don't have to lose your mind or your wallet just to get reliable transportation. First, break free from the monthly payment mindset. Dealers love to talk about low monthly payments, but that's how people end up overpaying for years. Instead, focus on the total price of the car. That's the real number that matters, and it's the key to making a smart decision. The best move? Save up and buy a reliable used car with cash. It might not be glamorous, but it's the fastest way to avoid debt and keep your finances healthy. Look for a well-maintained older Toyota or Honda in the $5,000, $10,000 range. These cars are known for their reliability and low maintenance costs, making them perfect for budget-conscious buyers. Remember, no car payment is true freedom. When you own your car outright, you control your budget and your future. If you absolutely must finance, get pre-approved at a credit union before you shop. Credit unions usually offer better rates than dealerships, and you'll know exactly what you can afford. Keep the loan term short, never more than 60 months, and shorter if possible. Put down as much as you can, aim for at least 20%. A bigger down payment means less interest paid over time and a lower risk of owing more than the car is worth. The market is slowly shifting to favor buyers, so don't rush into a deal. Take your time, and don't let sales pressure push you into a bad decision. Do your homework. Research prices online, compare deals, and always get a pre-purchase inspection from a trusted mechanic before you buy. Spending $150 on an inspection might seem like a lot, but it can save you thousands by helping you avoid hidden problems and costly repairs down the road. Remember, every crisis creates opportunities for smart, patient buyers. If you're willing to wait and negotiate, you can find a great deal. Be disciplined, realistic, and never sign up for a decade of debt just to drive something new. Your financial future is more important than impressing anyone. Adapt to the new reality. Think small, pay cash if you can, and keep your financial freedom. A modest, reliable car is all you need to get where you're going. In this market, survival means being smart, not flashy. Make choices that protect your wallet and your peace of mind, and you'll come out ahead.